Hello and welcome to Virtual Investor Conferences. My name is Bob Power, and on behalf of OTC Markets, we're very pleased you've joined us for our next live presentation from Thunder Gold Corporation. Please note, you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Wes Hansen, President and CEO of Thunder Gold Corporation, which trades on the OTCQB venture market under the symbol TGOLF and on the TSXV under the symbol TGOL. Welcome, Wes.
Thank you, Bob, and it's a pleasure to be here with everyone today. I'm very excited to introduce the Thunder Gold story to you. I'm a professional geologist with over 40 years of experience in the industry, focused mainly on gold and gold exploration. I have extensive experience in mineral resource estimation and doing merger and acquisitions evaluations for majors in my past career. So Thunder Gold is a very exciting story. It's located in Ontario, less than 50 kilometers from the city of Thunder Bay. It has highway access, which is year-round, and all of that translates into reduced costs, both for exploration and, I believe, in the future, the development of a very exciting gold opportunity. Before we begin, our forward-looking statement, which I'm sure all of you qualified investors have come across before. Basically, we'll skip through that, and I seem to, sorry. So, an overview of the executive summary of the opportunity. I see a Tier 1 discovery opportunity at Tower Mountain. A Tier 1 project basically offers greater than 10 million ounces of mineral resource potential. This is a large tonnage, low-grade deposit, so we're talking about a supersized open pit mine, probably producing better than 500,000 ounces of gold a year. That's well in the future. We're at a very early stage. We only have about 40,000 meters of drilling completed to date. That 40,000 meters of drilling has identified a system that measures 1,800 meters along strike, about 300 meters across strike or width, down to a depth of 500 meters. We have over 190 drill holes, historical drill holes on this property that indicate that mineralization continues at depth. It's amazingly consistent gold grades. Gold is the only mineral of economic interest that's been discovered to date. There's a significant portion of the property that's never been explored and never been tested, but surface sampling indicates 24 known gold targets within our footprint. And of those 24 known gold targets, about approximately half have been drill tested, and the gold grades have been verified. And I'll go into the details on that later. What really excites me about this particular project is the upside potential. Basically, I believe that there's 1,800 meters of strike length that's been defined. There's about 4 to 5 times of that strike length that has yet to be drill tested. And that's the real upside opportunity here. We're a very low-cost explorer. Our exploration costs are less than $250 a meter. Our corporate burn rate is very, very low. It averages about $50,000 a month when we're not drilling. And our objective as a company is not to build the mine. I think that's a fallacy that a lot of junior explorers try to promote. Having built 6 mines in the course of my career, or been part of teams that have built 6 mines over the course of my career, it's a difficult undertaking. Our objective at Thunder Gold, and my objective at Thunder Gold, is basically do world-class mineral exploration and build this project up to a stage where it would be a potential takeover target for producing gold producers. So we're in the right project. We have the right project in the right camp. We're located in the eastern end of the Shibandouin gold belt. It's a new and emerging gold belt in northwestern Ontario. As I said, highway access immediately to the property gate. Our claims are shown down here in yellow. We have about a little better than 2,500 hectares in total for mineral exploration. Only about 40% of that has been explored to date. There's a very exciting discovery about 10 kilometers or 7 miles to the northwest of us. That discovery is producing exactly the same results as this historical record from Tower Mountain. So I think, to me, that demonstrates a regional scale or a district scale opportunity in the gold space. I love gold. I've always loved gold. I've worked in gold my entire life. And this is basically a chart of the gold price from when I started my career in the 1980s to the present day. And you can see the value creation opportunity in the gold space. I think there's a lot of upside opportunity to come in gold for a number of different factors that I'm sure you're all well aware of. So I won't spend a great deal of time addressing that. We have 172 million shares issued and outstanding. About 20% are held by insiders. Our champion on the insider front is our chairman, Dr. Elliot Strachan, who has been associated with this company for over 40 years through a number of different name changes and different projects. He's been a very loyal and supportive shareholder of the company and continues to do so to this day. I'm the president and CEO. I've been with the company for a little better than a year now, as has David Speck, our CFO. The rest of our board brings both geological and mineral exploration expertise, as well as public company expertise to the boardroom. So I think we have a very strong and functional board that will serve the company well going forward. We currently have a good treasury. We have over $900,000 in treasury. But as I'm sure you're all aware, mineral exploration is a very expensive undertaking and consumes cash very quickly. This is an aerial photograph of the property. Our claims are shown here in yellow. The important thing to note here are the 24 known gold targets. The gold stars have been drilled, the silver stars have not. But more importantly is our access to infrastructure. Here's the Trans-Canada Highway. It's a paved highway within 2 kilometers of the property boundary. There's an Ontario hydro line that crosses the property. Both national railroads cross the property. And the property is 50 kilometers away from the port city of Thunder Bay, and Thunder Bay has access to the St. Lawrence Seaway, which provides access to the world, and that's particularly important if there's enough mineral resources identified by our exploration programs to warrant future development. Best of all, there's no water. We don't have to deal with lakes or rivers or pristine wilderness. This is disturbed land, easily accessible, and immediately available for mineral exploration. The geological model that we're working towards is an intrusion-related gold deposit. Intrusion-related gold deposits are among some of the largest in the world. Commonly, these are large tonnage, low-grade open pit mines, so in the range of 500 million tons plus of mineralization, averaging about a gram per ton. And that's exactly what our drill program is showing us to date. This is the 1,800 meters of strike length along the western contact of a multi-phase alkalic intrusion. And that's important because alkalic intrusions are known for a very close spatial relationship to some of Canada's largest gold deposits. Our drilling pattern has basically identified consistent, broad intervals of low-grade gold mineralization all along the western contact of this intrusive target. But the remaining contact zone around the intrusion to the north and to the east and to the west is untested and represents the exploration opportunity that we're trying to exploit at Thunder Gold. The rocks are very simple. We have intrusives, the pink rocks, and those intrusives intrude into the green rocks, which are shown here in the middle of the volcanic sequence. All have very similar grade and tenor. There are no statistical deviations of the population when you start examining it based on rock type or observed alteration. The key at Tower Mountain is the mineralization is directly related to the tenor of pyrite mineralization in the host rocks. And in this particular instance, you can see the volcanic unit is fractured to a micro level, and those fractures are flooded with both pyrite mineralization and gold mineralization moving with the pyrite. The good news is that pyrite mineralization offers a very, very distinct geophysical profile, especially when you look at induced polarization surveys. And induced polarization surveys are one of the primary methods that we are using to target our mineral exploration. This is a table of typical drill results, and those typical drill results range everywhere from up to 50 to 100 meters of over a gram per ton, and in places significantly higher. You have higher grade pockets within the system, and those drill results are consistent both from the 2021, 2022, 2023 drilling, which is shown here on the left, as compared to much of the historical data, which was collected from 2002 to 2011. The consistency of the grade between the programs basically indicates the consistency of the grade within the mineralized system itself. This is just an aerial, three-dimensional overview of the drill results. Everything that's shown here has a grade of greater than 0.3 grams per ton. 0.3 grams per ton is currently the operating cutoff grade of the largest open pit producers in Canada today. Those would be Malarctic and Detour Lake. Both of those mines are currently producing over 700,000 ounces of gold annually. They're both owned by Agnico Eagle, one of the largest gold producers on the planet, and possibly one of the most efficient gold producers on the planet. So Agnico Eagle, Barrick, Newmont, those are the companies that I think will eventually be interested in this district in the future, and those are the companies that we're trying to develop our exploration program to highlight to them the opportunity that exists at Tower Mountain. A lot of people consider high-grade gold to be the king of the industry, and you see a lot of companies that are releasing spectacular drill results of several thousands of grams over very narrow intervals, generally less than a meter, and those are absolutely of interest. We don't see that as much at Tower Mountain. They're very rare. Out of a population of 25,000 samples, only a handful, about 7 in total, average greater than 30 grams per ton. Our recent drilling in 2023 actually returned the highest grade sample to date on the property, a grade of about 940 grams per ton over a 1.5 meter interval. That's interesting and exciting, but the real meat of the matter here is the large tonnage low grade opportunity. And what we've seen in looking at the data and dissecting the database and evaluating the statistics of the population, which is an important step that a lot of junior companies don't take. What we see is basically tremendously consistent grade, regardless of mineral type, regardless of rock type, regardless of alteration, regardless of depth from surface, year drilled. We've looked at the data at a number of different filters, and we keep coming back at the same thing. And that's basically at a cutoff grade of 0.3 grams per ton. What we see is an average gold grade of between 0.77 if we use a capped grade, and I'll explain that in a moment, up to a high grade of 1.11 grams per ton. This is a statistical evaluation of composite samples, so all of the sample lengths have been reduced or standardized to a 5.0 meter or 15 foot interval length, and that's a statistical means of evaluating variability in a data set. When we look at the composite data, regardless of how we look at it, what we see at a 0.3 gram per ton cutoff is a very consistent average grade of individual populations within that larger population, and very minimal variation in the coefficient of variation. What that means is you can predict the grade that's going to come in the future. And that is, predictability is the single strongest and most significant benefit a gold mine can have. If you're able to predict your gold grade, you're able to predict your costs, you're able to predict your profits, and you're able to operate in a much more efficient manner. And we see this looking at it by lithology, and we see it looking, the only thing that leaps off the page to date is basically the relationship between IP chargeability signal strength, which is shown here on the right. And what that shows is an opportunity to upgrade the average grade of the population by a factor of 3. So the higher the chargeability, the higher the grade. And that's a good thing for us, because if we look at our overall coverage of our IP survey, what we see here is this white line represents the intrusion, which I showed in pink in an earlier slide. And here's all of the drilling along the western contact localized within that IP chargeability high, which is the hot colors, the mauves and the pinks and the reds. And what we see is basically over 10,000 meters of drill targets that surround and are coincident with that contact. This white line basically represents the contact of the alkalic intrusion. We see these IP chargeable anomalies paralleling that contact at multiple locations, none of which have been drilled to date. And that represents the upside opportunity. So we believe there's an exploration target currently defined by drilling on the western contact of between 1 to 2 million ounces at an average grade of under a gram. And basically what we see is 4 times that strike length surrounding the other contact of the intrusion, with a coincident chargeable anomaly, which we have demonstrated statistically offers a higher grade gold system than drilling outside of that. Large tonnage, low grade metrics. Look, some of the most profitable mines in the world are large tonnage, low grade mines. Fort Knox in Alaska, where I was fortunate enough to work with Kinross. Round Mountain, another Kinross opportunity in Nevada. Paracatu, which is the lowest grade gold mine in the world. The average grade at Paracatu is 0.4 grams per ton. It produced over 600,000 ounces for the last several years. So large tonnage, low grade mines are certainly of economic interest and are certainly a focal point of the majors, the gold producing majors. In terms of comparables, the Tower Mountain data set, if we take the headline results that have been published for the last 3 to 4 months on various sources throughout the industry, these are headlines that are promoted by the companies themselves. They're not capped, they're not touched. If we compare the tenor of the gold mineralization for all of our competitors, doesn't matter where they are in the world, what we see is that the Tower Mountain data set falls well within that economic window, which is shown here by the 2 blue lines. So even though we have low grade, what makes up for the low grade is basically the meter intervals that we have, which basically are mineralized intercepts over several hundred meters in some instances. In terms of the value of large tonnage gold grade deposits, this chart basically shows the top 10 gold producers in Canada today. And it's Canadian focused simply because we're a Canadian focused exploration program. But if we were to expand that to US opportunities, you'd see the same exact picture. And what you see is these, on the left-hand side of the graph are the 2 lowest grade gold deposits currently producing in Canada, Detour Lake and Malarctic. Both have a grade of under a gram per ton. The columns represent the all-in sustaining cost per ounce of production at both of those mines. And what we see is an all-in sustaining cost of between $900 to $1,000 an ounce, which is exactly the same as the all-in sustaining cost at Brucejack, which is in northern British Columbia, one of the highest grade gold mines in Canada, and Macassa, one of the highest grade gold mines in the world, with an average grade of over 16 grams per ton. But the all-in sustaining cost is level between those high-grade producers and the low-grade producers. So that basically indicates the value of large tonnage, low-grade deposits is exactly the same as these high-grade systems that are currently getting a lot of headlines throughout the industry. We have done preliminary metallurgical test work on the ore and the mineralization at Tower Mountain, which indicates recovery isn't a problem. Gold recoveries of 90% are probably highly likely. And, there's no red flags, I guess, is the best way to look at it in that respect. We've been extremely busy since I joined the company. We've relogged about 25,000 meters of core to try to standardize that library. We're in a position we could do a mineral resource estimate today if we are so inclined, but I don't think that mineral resource estimate is going to help us in terms of market perception, largely because large tonnage, low-grade deposits, I think you have to start at about 5 million, a mineral resource of greater than 5 million ounces, simply because of the low-grade nature of the mineralization. We're not there yet. I can tell because of my experience that we're not quite over that hurdle. We need to raise additional funding and do additional exploration work in order to clear that hurdle. And then I think that will get us off and running in terms of adding value for our shareholders. In general, these large tonnage, low-grade deposits require a significant amount of exploration investment in order to make them come to fruition. This is a comparison of about 20 properties around throughout North America, large tonnage, low-grade properties. The average discovery cost, or the average number of ounces per meter drilled for these deposits is about 35 ounces for every meter that's been drilled. So what that means is you need about 30,000 meters of drilling for every million ounces of potential mineral resource that you're going to put into the mineral resource category. And if we use that as a metric and assume that we've completed 40,000 meters at Tower Mountain to date, that we believe gives us a very firm handle on between 1 to 2 million ounces of mineral resource potential. And to double that, we would have to do twice the amount of drilling. So we'd be looking at approximately 90,000 meters of drilling to get us up in the 3 to 4 million ounce range, and then additional drilling to expand the mineral resource beyond that and reduce the risk associated with it by doing infill drilling. Our focus basically is to raise the funds to do large step-out drilling. This property and the consistency of the grade basically means you could probably drill it off on 200-meter space sections and have a fairly good idea of the potential mineral value of the potential resource. So that's our plan: aggressive step-out drilling, targeting the remaining periphery of the intrusion where there's coincident chargeability anomalies. Drill those holes, issue the results, drive some value for our shareholders, and make everybody some money in the future. So with that, that's I'm open to receiving questions from the audience, and happy to answer those as they come in. I have to put my glasses on to read the questions, so my apologies. Regarding, somebody has asked, when do we predict we'll be prepared to do a maiden NI 43-101 mineral resource estimate? I would say that would best be delayed until a point in time when we have an additional 30 to 40,000 meters of drilling in the bank. We've tested some of those targets on the remaining periphery of the system and demonstrated the consistency of grade that we've demonstrated on the western contact around the remaining periphery of the Tower Mountain intrusion. Somebody has asked about the all-in sustaining cost for Tower Mountain. I think the reality is most gold producers, in order to survive in today's environment, they're all in that range or that band between $900 an ounce to $1,100 an ounce. There's people out there that are promising significantly lower all-in sustaining costs, and it's not my job to do a critique of other people's work. I think you have to do your own due diligence. If you have a number of assets that are currently producing in that band, you have to have a very, very special and unique deposit to get to outperform that metric. I mean, it's basic statistics. Everything regresses to the mean. Somebody has asked about the capital needs to support our 2024 drill programs, and the simple answer to that is the more money we can put towards this project, the better. Obviously, we would do it in stages. If I had, in a perfect world, if I had $10 million of investor capital that I could invest towards mineral exploration, that's exactly where it would go. It's not going towards salaries. It's not going towards supporting excessive staff. It's going in the ground. And that's really how mineral exploration companies succeed, is the more dollars you can put in the ground, the better off you're going to be, because our job is basically to speak through the drill bit. And that's what I'm trying to demonstrate here at Thunder Gold. We're currently trading at between 2 and 3 cents, and we're paying the price of some of our past financings, for lack of a better way of putting it. Those markets are hitting those shares are hitting the market at a significant discount to the potential asset valuation in the future. This is a great opportunity to get into a very exciting and potentially a very lucrative gold story at a very early stage, establish a strong position, and ride the wave of success with us as we move this project forward. We're currently focused on identifying opportunities for potential joint venture partners to advance the project, which would minimize our dilution but still allow us to successfully explore the system at Tower Mountain. I truly believe, and I've seen a lot of these large tonnage, low grade systems in Nevada and in Alaska and down in South America, throughout Chile and Brazil. I've never been more excited about a mineral project in my life. It was so compelling for me that I actually put off retirement, basically to have the opportunity to work on this. It's a once in a lifetime chance in my mind, and I'm looking forward to advancing this project going forward. Somebody's asked who owns the Delta 1 project. The answer to that is a company named Delta Resources. As I noted, they're 10 kilometers to the northwest of us. They are producing a statistically identical population of results to the statistical population at Tower Mountain. You can have people that would argue that that's not the case, but if you look at all of their drill results and not just the selected ones that they highlight in their title presentations, then I think what you see is very consistent grade between two properties that are 10 kilometers apart. So to me, that indicates district scale potential, not just one multi-million ounce deposit, but possibly several. and that has to be of interest for mining companies, especially producers that are looking towards the future, looking to bank large resources into their mineral resource portfolio and developing those assets in the future. And developing a gold mine takes anywhere between 15 to 25 years, depending on the permitting regime. This project is in a stable political jurisdiction. It's located in Ontario, one of the best districts in the world to do mineral exploration in. It's in a greenstone belt, which is the most prolific source of gold in the world. There's a lot to like about this project, and that's one of the reasons why I'm very excited about it. I believe that is all of the questions that have been asked. So got no more coming in, and I guess that concludes the presentation. So I'd like to certainly thank everyone for their time. I encourage you, if you want, I'm more than happy to set up a one-to-one meeting and discuss in detail the opportunities that Thunder Gold offers to investors. We're very excited. We have one of the best symbols in terms of the OTC trades. It's TGOLF, which is exactly where I happen to be going right after this meeting. Is going to go golfing. No, that's actually not true. It's a work day, but you can always dream, right? So with that, I think that concludes the presentation.